Thank you for that warm-up. Goodness. All right, time to talk business headlines. Job numbers are out for the month of April. Employers added 160,000 jobs. That leaves the unemployment rate unchanged at 5%, but it's well below analyst expectations. So joining me now this morning to break down the numbers is Dave Smith, Chief Investment Officer at Rockland Trust. Dave, break this down for us. What does this number, this 160,000, mean?
Well, unlike Matt's forecast, the jobs aren't warming up. We were seeing a disappointment relative to expectations. We were looking for about 202,000 jobs this month, and so that's clearly a disappointment. The unemployment rate also was expected to drift down a little bit, so this combined looks at the headline level like it wasn't a good data point.
Okay, so what does that mean for the average viewer sitting at home in terms of their job prospects, for those looking for a job, and for their wallets?
Well, unemployment at 4.9%, 5% is actually very, very strong. So that's a good environment typically for people looking for work. We know in certain fields, unemployment's actually well below that headline number of 5%. So if you're looking for jobs, for example, in healthcare, very, very tight market, good opportunities. Interestingly enough, in the data this month, we saw a tick up in wage inflation. So wages were up about 2.5%, which is right about where the Federal Reserve would like it to be.
Okay.
That means it's not too fast and it's not too slow. Too much wage growth typically means inflation's on the come. Too little wage growth means the unemployment picture is likely to pick up.
So we want, wage growth is like anything else in the markets. You kind of just want stability, right? You don't want to see the numbers go up or down too much.
2.5% is the Goldilocks number for wage inflation.
Now, speaking of the Federal Reserve, let's talk about the Fed's upcoming decision this summer, because they're going to have to decide again on what to do with interest rates.
Right.
How will these numbers affect that decision?
I think it's very likely that the Federal Reserve will not do anything in June. That next meeting is June 14th and 15th. I think it's highly unlikely that they'll make any moves given the data that we saw today. They won't get an additional data point probably until just before the next release, and that's not going to be probably significantly different enough from what we're seeing now to make them want to move in that time period. The odds, the market's discounting the likelihood that they'll move in June at 4%. So very, very small.
I mean, that's great news for people looking to buy a home or, work with their current mortgage, reassess the value. Yeah. Okay, that's good news. Tell me what this means moving forward. What do people, because we've got a lot going on in our economy and our government right now. What is break it down at its base level?
So at the end of the day, I think the trend that we've been seeing for several years now is this sort of slow and steady economic recovery. It hasn't been robust. It hasn't been horrible. We've had a little bit of times, typically in the winter months when the economy seems to slow. It seems to then recover in the spring months, but it never gets so fast that the Federal Reserve gets concerned about the rate of growth. And so I suspect we'll continue to muddle along the way that we have really since the Great Recession ended in March of '09.
And this is good news, because we need to keep in mind, of course, that home buyers get very active this time of year, and seasonal jobs. There are a lot of workers looking for those seasonal jobs, for summer jobs, college kids coming home, living with mom and dad. So this bodes well for them.
I think so. I mean, we have a college kid coming home in a couple of weeks myself, so I'm hopeful that that is a good environment for them to be looking for work. The unemployment rate where it is probably a good number for folks looking for work today.
You don't want to be their ATM. You want them pitching in a little bit, huh? I get it.
Absolutely.
I get it. Dave Smith, thank you so much for being here today.
Thanks for having me.
We appreciate the perspective. All right, let's move on.